What's going on, guys, and the 5 ladies that watch my channel? In this video here, we're doing a stock analysis on Roblox, ticker symbol RBLX. So it's a fairly new company. I want to load this up in the stock research tool, and we're going to do a fundamental analysis on this business. So with Roblox, what we're going to take a look at is our company metrics, which compares the 5-year averages to the trailing 12 months, our financial valuations, which takes a look at their income statements, their balance sheets, as well as their cash flow statements. And finally, last but not least, we'll do a price analysis where we will find the intrinsic value of Roblox. So loading this up here and taking a look at the company metrics category. We have a lot going on with Roblox. It's fairly new, so we're not going to have some of this data here. So with a 5-year average, but we can go based off what our trailing 12 months numerics are. So we're experiencing a lot of negative numbers, which is not great. I'm going to just be completely frank with you guys. It's not great. We have no EPS, no PE ratio, no ROE, no profit, very minimal revenue, no free cash flow, no return on invested capital, a very mild Altman Z-score, and a pretty low Piotrowski score. There's nothing much really to say about this business. I like to analyze companies that have been on the market for 5 or so years, and this is going to be a great example, because when you're looking at a new company, when it IPOs, it's so exciting, right? There's brand new companies hitting the market. However, they have to prove themselves. So right off the top, looking at Roblox, there's a lot of negative numbers, and for me personally, I would say no to this business because they haven't been on the market for so long, or they haven't been on the market for that 5-year threshold, as well as there's nothing really positive about this business. Jumping into the financial valuations, and as I said, we cover a lot of this. We cover all 3 statements here, and with my software here, we have access to all of that information. We are scoring this company a 4 out of 10. That is not good. However, they are getting some points. So the points that they are getting is in the current ratio, sitting above 1.5. It's currently at 1.73, which is good because that means they have enough assets on hand to cover their liabilities. However, they have, well, the revenue growth is up, which is an incredible, it's pretty high, sitting at 88%. Their free cash flow is also up. However, it is still sitting in the, probably in the negatives. Let's take a look. Let's go look at the cash flow statement of Roblox and see what that situation is looking like. So with our free cash flow, we're sitting at $500 million. It has been going up. It's been growing exponentially, as we can see here. But nonetheless, you know what? It's still a positive. It's still a positive number, so we'll give it that. As well as the share dilution is going down, which is great. That means they're buying back shares. Now, the only problem I have with this, folks, is if they're buying shares back if they're overpriced. And with Roblox, as we see here, we're currently sitting at $39, but we hit a high of $141. $141. That is absolutely insane. But what I like to looking at is what caused. See, when I see ranges like this, $21 to $141, it really begs the question, what changed in the company to justify these incredible price jumps? And this is something you should ask yourself as well. Why is this company's price going up so drastically, and why is it going down so drastically? So right now, where it's currently at, it's at $39.40 at the time of recording this video. Is this justified? And what we like to try to do, folks, is buy companies at obviously the lowest price possible, and we shouldn't get scared when a company's price goes down, because this means that there's a great opportunity potentially that this may be in our wheelhouse if it's trading underneath its fair value. However, that being said, it hasn't been on the market for that long. There's a lot of negative numbers. We don't have enough data provided just because of those metrics. Like our debt to equity is incredibly high. So these are a lot of red flags, folks. You're taking a look at our debt to equity. We're not getting any points there. EPS growth is non-existent. Return on invested capital is also out. And net income is just not enough data also not being provided. So here's the thing with Roblox. Personally, this is a company I would avoid. just because there's not a lot of information given. But nonetheless, we're going to do the full evaluation. We're going to go into the price analysis section, and we'll figure out what a fair price to pay for this business will be. I'm going to do a 10-year analysis. I'm going to fill out these boxes using the historic numbers that they've provided with us, and I'll touch base with you in just a quick second, so stand by. So folks, before we jump into the price analysis of Roblox, if you're enjoying the video so far, hit that like button, hit that subscribe buttons down below here. And as well as if you want to get your hands on this software, stay tuned. It's coming out super close. So you don't want to miss this. Subscribe and you'll find out when it's available for you guys to use. Now, what I like to do is, if you're new to the channel, I like to stay as conservative as possible. So the numbers I'm punching in here are a reflection of the margin of safety I'm trying to give myself. This is a fairly new business, so there's a lot of speculation to be had. So what I'm going to do though is I'm going to discount myself a lot with our revenue growth. I know they've shown 88, 100, doesn't make sense to me in the next 10 years. So I'm going 20, 25, and 30. These are extremely large numbers considering it's a $23 billion company in terms of market cap. So I'm going to do 20, 25, and 30. With our profit margin, I'm using numbers that just don't exist. So I have to do, and my go-to is go 5, 10, and 15% profit margins. Considering it's a tech company, it might hit those numbers eventually, but who knows? This is speculation at this point. With a free cash flow margin, I'm sticking within that same route, going 20, 21, and 21.5. And then at price to free cash flow and PE ratio, we're sitting at these astronomical ratios of 44.55 for price to free cash flow. I'm going to go down to 14, 16, and 18. Any numbers underneath 20, that's what I want to try to stick towards. These are pretty much my go-to numbers. As well as our PE ratio, I'm using numbers, once again, that we haven't seen yet, considering we're sitting at negative 44.80. Putting in a desired return of 13%. We're going to load this up. Once this gets to the end, we're going to find out what our price to pay for this business should be. Do I have confidence it's going to be a fairly priced business? Not really, but we'll find out soon. $82 average price. Now, I'm not wrong. What I was saying, is it an overpriced business or not? Because here's the thing, folks. You know what's really killing it? Profit margin. I'm using numbers that don't actually exist. 5, 10, and 15%. You assume a 15% profit margin? Yeah. Buy all day, $134. Profit margin of 10%, buy all day at $74. 5, it's still overpriced, right? It's sitting at 36, and the current price is 39. What do we have for profit margin, folks? What is the number that's being recorded? It is negative 25%. So negative 25%. We actually don't even have 5% profit margin. We don't have those numbers. So here's what I'm trying to say here, folks. We need to see some history with this business to try to get an idea of where it can go. Once the business has been able to show you what they can provide and produce in terms of numerics, we can use that to somewhat gauge with some margin where the future might hold for this company. With Roblox, because it's such a brand new business, there's no justification for any of these numbers that I plugged in, to be honest with you, because it's a fairly new business, and this is why it's imperative. And what I try to tell people, look at companies that have been on the market for over 5 years. Even 3 years is maybe pushing it. You might get some decent data depending on how the business is run, but 5 years ideally is a sweet zone if you're trying to get into a somewhat new business. Roblox is essentially it's a baby company. We need them to show us more positive numbers, as well as I'm avoiding it for a lot of reasons. This score here, I don't like buying companies with such a low score on the financial evaluations. 7 is ideally the lowest I will go. So 4 is just not happening for me. Too many negative numbers on the board here, and this is just speculative land. So if you believe these numbers, if you believe that they'll do 10% profit margin or 15% profit margin over the next 10 years, starting next year, then this company is a buy for you. However, they have to show those numbers before I even think about jumping in. So where do I stand with Roblox? Incredibly overvalued. I would personally avoid this for now. I think it's a decent tool. I know it's been very popular amongst the Gen Z population, right? So the price just needs to make sense, and right now it doesn't. So with that in mind, folks, you want to get your hands on this software, stay tuned, it's coming out. Make sure you hit the like button, subscribe button, and I appreciate you watching. Write down a company in the comment section down below if you want to see it evaluated. That's the video. I will see you in the next one.